Well, good afternoon, everyone, and welcome to our Trading App Store Showcase here at TradeStation. This afternoon, our presenter is Mr. Andrew Horowitz. He is a registered investment advisor, and he's been managing money and writing and developing products in the investment segment since the late 1980s. He's taken his principles of financial and investment management to create targeted investment disciplines, and his proprietary models provide a very comprehensive methodology for establishing specific investment ideas. The combination of high technology with hands-on expertise helps his clients create the kind of plan needed in today's complex financial world. Today we're going to be talking about the Trigger Charts Commander series that Andrew has developed for use with the TradeStation platform. Our presentation today is for educational purposes only. All the symbols and the trading ideas that we might discuss are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone, and options trading carries a high degree of risk and may not be suitable for all traders. We've included in the chat panel a piece of disclosure information regarding the characteristics and risks of standardized options, and I urge you to view it when you have time. So now that we have gone through some of the housekeeping, I want to welcome Andrew Horowitz to our Trading App Showcase today. Thank you very much for coming, and we hope you enjoy the presentation on Trigger Charts.
Hey, thanks so much, Don. I hope everybody can hear me okay. And we are broadcasting. I'm going to move that away a little bit so I'm not killing the microphone here. But yes, this is an exciting day. We have the opportunity to present our indicators, give you some education on the area of technical analysis. For those of you that listen to me on the various podcasts that I do, whether it's the Disciplined Investor podcast each and every week or DH Unplugged, you know that a lot of the ways that we get levels of interest of where we are looking to initiate a trade are based on these indicators that we developed, and we developed these some time ago. And we think they're really there's a reason why we develop these. There's a reason why we use these. And the bottom line is that we're going to go through some of this today. Of course, there's a lot more educational materials on triggercharts.com, a whole bunch of videos and information and all that. But it's just something that I wanted to go through with you to show you some of the power that can be really used by traders when it comes to understanding how this particular set of indicators works, because it's much different than probably some of the other ones that you've seen out there that just have a bunch of lines that kind of move up or down, or they cross at certain points and all. This is a whole different tool from the baseline. It looks at volume, it looks at price, it looks at time. We're going to talk about all that. So let's kind of go through some of this here and tell you a few things. First of all, let me tell you how, in fact, if you desire to check out a trial, which there's a 10-day free trial on all the Trigger Charts programs, you can simply go over to the Trading App Store at TradeStation, which looks something like this. And hopefully you can see that on your screen at this point. And somebody can chat through me, make sure you do see a new screen with the Trading App Store on there. All right, great. Making sure the technology works here. Basically, what you could do is you could go to the main page and scroll down a little bit. And usually when you scroll down, you see that there's a bunch of things, and we're usually in the highest rated category. But if you didn't want to do that, you just want to simply just type in Trigger Charts at the top here, press enter, and it will simply take you through to the Trigger Charts, all the different indicators that we have. We're going to be talking about Commander series today in particular, but all the different ones from the Aileron, Q Reversal, Bitcoin Ace, which is something new that we have, the Radar, etc. And there's a bunch of other ones. A couple of freebies in here that you can get as well. There's, let's see here, if we can click this, the whole list. There we go. So let's see. Where's the key command? Oh, this is the, here we'll go all. Some freebies in here. So there's the Key Reversal Indicator, EcoTrack, which is free, which charts all sorts of economic information as well. All right, so let's get back to this and start talking about what this is all about and what we're talking about. So I'll give you a quick overview of the topics, kind of a lay of the land of what we're going to talk about today. Bit of an introduction and a background with regard to some of the important points of the key components of this particular set of indicators, because the Commander series actually is a set, a suite, if you will, of indicators. So there's the altimeter, there's the radar, and there's also the autopilot. I'm going to kind of bring this all up for you. The altimeter gives you a trading blueprint. It shows you on the chart the key levels of importance that you really need to be paying attention to, very simply laid out, and it's laid out in a collection of horizontal lines for support, resistance, key levels that we look at as well. We call these, areas of either a high level of overall resistance. There's support on the bottom side, and then in the middle, it's a key volume nodes, which we'll talk about. And it helps you establish these levels of entries and exits and stops, where you want to get in, where you want to get out, where the risk is. On the radar, it gives you a much more granular view. So it takes the altimeter one step further and shows you a real inside look at, almost like an X-ray, of where these levels are. Because if you think about this for a second, what really matters in price when it comes to markets? What really matters is where we are. It has to do with where the big boys are playing, right? So if we can figure out where the level of interest is from the aspect of volume and price, and what happens is every time a buy or a sell goes off at a certain price during the day, we accumulate all that information as it's ticking by tick, trade by trade. And what happens is that we start to get a picture that forms of understanding of where the big volume levels are. So therefore, you could look at things like moving averages and say, okay, well, there's a moving average that I think is interesting, and it's a 50-day moving average. And a lot of times we know that there is a lot of interest in those levels. But what we do is one step further. We actually show you where the trading is going on, a culmination of the highest levels of trading from the altimeter standpoint, and then also with regards to the radar, it gives you a breakdown pretty much of the flow, what it looks like, and it color coded. And the autopilot, which is based on the chart and the radar screen. As a matter of fact, we have a multi-time frame that is really kind of unique, because I don't think, and probably Don can correct me, but I don't think anybody else in the trading app store developed something like this where we can see on one line several different time frames. We can see 30, 60, 90, 240s, dailies, weeklies across on one line, on one row across, as opposed to, for those of you that know the radar screen pretty well, you have to then usually put them in separate columns, separate boxes on the way down. All right. Clicking, clicking, clicking. Next. All right, so the big issue here is this is all developed on something called the auction market theory. Basically, what we're looking at is the identification of supply and demand. And when there's a lot of supply in the market, what happens is usually we're going to see that prices start falling. When there's a lot of demand in the market, well, prices will start rising. Well, we want to also look at this whole area of balance and where there's agreement in the price, because what you have here is the idea that when there's agreement in the price, you usually get a horizontal move. There's nobody's really saying that, hey, I think this is worth a lot more or a lot less, and you get a little up and down, sometimes called a consolidation. But when we look at a level of price that there's no agreement and there's a fight, like we've been seeing recently in the markets themselves, where there's just, start the day down 200 points and then ends the day up 100 points. Those are areas that are very tradable if we can identify really where these levels of imbalances are, and where there is these levels or are these levels of imbalances inside of the profiles or inside of the price range that we're looking at, you see the opportunity to have a vertical move. And what do I mean by that? Well, if you think about consolidation, the whole idea that things are moving horizontally, from left to right, price not moving very much within a tight band. Well, I'm not interested in that. Are you? I mean, what were we interested in? We're interested in seeing the vertical move, a very fast vertical move up and down. So this is where we can see where there is the opportunity to find those things. And it's basically called price discovery, right? So the opportunity to find where the levels of interest are from a price standpoint, and more importantly, where traders are putting their money where their mouth is. And we know that because we calculate the volume. We can find out where these levels are. So this is all about the auction market theory. We have a lot more information about this on the site, triggercharts.com. Also, if you download the Commander series, if you get the trial, there's a link there that will give you a full user guide, and inside there is a full discussion of what's happening there. But essentially, the main thing that I want to really give you takeaway on this is this whole idea that right here, there are two types of markets. There's consolidating and there's trending. And if we believe that, and we go into the discussion of how markets trade, how a stock trades, or futures or a currency, if we believe that there is the opportunity to look for a consolidating market, which we probably don't want to participate in, or a trending market, which in fact is something that we want to get involved in, a trending market, either up or down. And if we can stay with the trend or catch the trend at the right time, that's very powerful. So keep that in mind. And the main thing about how we design this, I designed this for myself. So understand something. When I initially set out to design this, we wanted something we could use here. We manage money. We manage money for clients all over the world, and we wanted something that we could utilize. And then when some of my friends over at TradeStation, said, "Hey, could you build something and some of the things that you're doing for us?" And when they first started, we were one of the first ones in the App Store. Back then, it was called what was it called before? It was called the App Store, TradeStation. I forgot what it was called, the trading app store, something like that. It was called something different before. But basically, they asked us to come up with something, and I said, okay, let's see what we can do. And basically, you don't have to guess where the support and resistance might be. So historically and traditionally, what people would do is when they looked at support and resistance, they would take out a line or a ruler if you were doing it on paper, or a line if you're using your TradeStation program, and you just draw those. But what were those really represented of? They only represented really price. So when you're looking at whether it's equities or futures, or you're looking at currencies, what we're looking at is just price. What we put in there was also the volume issue when it comes to, let's say, equities. And yes, it does work with equities. It works with all the different. As a matter of fact, it works with anything you can put into TradeStation. Any chart you can put into TradeStation, it works with. So it could work with cryptocurrencies. We have the Bitcoin Ace available based on the same theories that go into this. And if you didn't know this, there are a variety of cryptocurrencies that you could actually see 24/7 inside of TradeStation. And if you're not familiar with that, maybe Don, you can, if you're familiar with it, you can put the symbols there. It's like BTC USD, there's ETH USD. These are feeds directly from Coinbase that now TradeStation is utilizing inside of the chart. So you can see what's going on there. But you could use these in there and it works really well. I got to tell you something, seriously, this kind of technical analysis when it comes to the cryptos works really well. I was totally surprised when it did. So if you have the opportunity, you can look up, for example, this one. That's a symbol. If you guys can see my chat there. This BCH USD, what I made, LTC. I think these are the four that you can get there. Those are the four. So you could use that also because it gives you, a really interesting thing. And there's a tremendous inefficiencies when it comes to the cryptocurrencies. But you can check that out over on our website. There's a whole thing on Bitcoin Ace. And that really deals with the Bitcoin futures that are available on TradeStation. But also you can use this for the core Bitcoin symbols that I just put inside the chat. You can use it for commodity futures, index futures, forex, stocks, ETFs. It's really, the good news is it's available for trades, day traders. If you're using, let's say a time frame of, I don't know, somewhere of 0 to 30 minutes, 60 minutes, it's available. It's also available for overnight swings. It's available for position traders and even long-term traders. So as we say, that HODLs, holders. No, it's not available for Ripple. I don't think they have it yet. Let's go quickly over the whole part of the thing, the suite now. So first of all, we have the altimeter. So what does the altimeter do? So we want to look at, for example, the higher probability opportunities, right? We want to see where's the higher opportunities, the probability opportunities to get into a trade or get out of a trade or go short or go long. And what you could do is it's a very small picture. We'll get to the bigger pictures in a second. Is that you want to really get a blueprint for your trading. You want to know before you set up that trade, before you enter the trade, okay, where is my out? Where's my in? Where's my add-on? Where's my stop? Where's my profit zone? So all these things come into play when you're doing this and it helps you set this up. Because what we do is we draw these lines. They're very simple. There's a red line, there's a blue line, and there's a green line. So those are important levels. Then also we color code the whole other side of it, which is the autopilot, which tells you, hey, get in here, get out here, short here, cover here. But it gives you these stop levels. It gives you price targets. It gives you basically a blueprint. There's a little bit more involved. It's not just simply, okay, here it is. It says go and go. You could do that. I encourage you to look at a few more things and research how this works a little bit more, because if you understand what we'll call right now looking left, looking from right to left, and then left to right, there's a whole bunch of information you can find out and understand. I'm going to give you some examples of that in a second. That's pretty cool. It also helps you understand when to add on to trades if you're in a trade. So if you're holding a stock, which you're committed to, that you feel like, yeah, this is a stock I'm going to hold for a long period of time, well, it can help you understand when the opportunity is to add on to that position, whether it hits a level that is maybe bounceable and you want to say, you know what, I'm holding this thing. I want to keep on buying it when it hits levels that are really low. Where are those levels? Well, we'll give you some points that are important to look at. And again, for those of you that are trading, give you those entry and exit levels. And then what we do is you use this also, these are all pieces of the puzzle. These are all pieces of the process when we want to look at how we actually set our trades up. So when we look at the altimeter, that's one thing to look at. Then you could add the radar, which is again right on in the same commander series, all part of the commander series. You could turn off, turn on, or leave it on. But essentially it looks something like this. What we're looking at here is on the left-hand side, we're looking at prices that are inside versus outside of an altimeter. And these three lines together, any of these, 1, 2, 3, that's considered an altimeter. 1, 2, 3, altimeter. And then you get a secondary one, then another one here, then another one. So for example, right here, what you're seeing is a price outside of the altimeter. And when you see those kind of things, look at the difference, right? Look at the difference of the price action here when it stays within the altimeter and when it breaks. And when it breaks, that's the opportunity for this vertical move. That's what we're looking for. We also have what's called the unfair high, which is the red or the resistance, unfair low, which is green, which is the support, and our high volume node, or right there, the blue area, which is the highest level of interest from a volume standpoint overall in that range. So you can look at this for a couple of different ways. You look at it as breakout levels. When it breaks below, you get short. Or we could say something differently, which is really important, which we like to say. When price is below the green level or the unfair low, do not be long. When the price is above the red, do not be short. Can you imagine if you had the opportunity to have some basic rules that says, okay, do not do this? How many times have you done things that you're like, oh, I shouldn't have done that? I knew I shouldn't have done it. I did it anyway. And this gives you the opportunity to refine some of that and stick by some of the rules. We look at the width of these altimeters too. And some of this may seem a little bit new to many of you, but this becomes second nature very quickly. The wider the altimeters are, the more increase we see in volatility. So that's altimeter, just a little bit of that. Now radar, like I mentioned, is kind of the altimeter, but really refined. It represents a total area of market balance and imbalance. And it kind of looks like what you're seeing on this chart here, where we have these. This is a traditional B. See the B? You can draw a B on there. What this always usually tells us, when we see this kind of profile, we see this as a potential for moving these down. I'm going to show you some charts in a second. So everybody don't worry about the time frame. These are just examples. I'm going to show you whatever time frame you want to look at in a minute. We're going to go right to the program and go through that. But essentially what we see is that there is a hole here. There's an area of just not much interest. And when it starts passing through that hole, look how fast it zipped down. this particular chart. So the radar really gives us this whole fast zone information. It gives us consolidation or horizontal slow zones, and it gives us a opportunity to look at a refined and a real a more detailed look at what's actually going price by price over the time period. And a lot of patterns you can look at here too. Like I mentioned, there's a B, a small b, there's a P. We have the opposite here. We know this is a very supportive pattern. It's a drop pattern with a support level. That's really important because we see this yellow line that comes through here. And again, we'll get a little bit bigger here, but you see, and this is not probably the best image, but you see here's a P right here. There's a looks like a P. And you can see that it moves up very quickly into that. But once it starts moving below that area and you look left, remember right to left, you look left, look at that drop that happened. There's a gap drop because there's just nothing in this region that was really very supportive. And there's holes in it. So we're looking for holes, we're looking for gap zones, we're looking for all of these levels and areas of interest in general designs. And once you get used to looking at this, it's pretty easy to see what's happening. It's pretty easy to identify, okay, that makes sense. We're below the unfair low and we have nothing to our left. And man, it could really drop significantly because of the lack of support. Now, the autopilot is, as we call it, a smart strategy, a strategy modified and algorithmic, algorithmically reasoned trading indicators. I don't know, my tongue is twisted today. So basically what this is an algorithm that's based on the radar and the altimeter. And what this does is it kind of compacts everything. It looks at the history, it kind of does a little bit of a future prediction, and it's basically looking at a projectional bias, projecting the bias on direction, stop loss protection, profit targets. It's color coded, which is nice to deal with, and we use all of these radar and altimeter and some algorithms to provide entry and exit points. And Martin, you're asking the question that somebody's asking right now is, are we using a volume weighted standard deviation to get the support resistance? And yes, there is some of that in there. We're using a volume, not really necessarily volume weighted, we're using a volume at price, a volume at price. So we're looking at, adding these all up, finding where it all is and putting some calculations in there with some swing and then coming up with where the most important levels are, like you see on a market profile that you may see in a standard program that usually just projects on a screen only, on the screen of your chart, whatever the time period is. So simply we have buy signals are green and short signals are red, and entry alerts are yellow. So we want to confirm out that bar and make sure that we are confirmed. We have an orange, which is an exit, could be due to we reached a price target, and stop levels magenta, which we never want to see. Very simply, just kind of follow along. There's a couple of caveats in here, like when we see a yellow bar that moves well above and it continues, do you enter that or you wait for the green confirmation? Usually we want a confirmation of green because we can get back and forth. We go back and forth on that. So, we will look at that. And then finally, before we get to the charts on TradeStation platform, we are going to look at the autopilot. And you notice that we have on the top here, the 30 minutes right here, 60 minute, 240 daily and weekly. And you see that it looks across. It says, okay, well, for Apple, just as an example, we have 11 bars. We've been long on the 60 minute, 7 bars on the 240, 4 on the daily, and not anything on the weekly. So it gives you that combination. So again, we got trending and consolidating patterns, trending patterns that are above or below the bands, and looking left. And we like to look at multiple confirmations from a couple different indicators to get there. So I'm just going to skip through some of this. So I mentioned we could do any time frame on these. That's good. And okay. All right, let's go back. All right, let's do a screen share here. That's back to where that was. Let's pull up. All right, is that visible? Somebody chat back that that's visible. Thank you. Thank you. Making sure everybody stays awake. That's what I'm trying to do. There we go. Thank you very much. Okay, so let's take a look. This is out of the box. This is what it looks like. Something like this, at least. It'll look similar to this. when you get it. On the top of the screen, what you have here is a let me see something here. Okay, yeah. Let me click something here and just make sure I have. Okay, I have my pencil. Just making sure I have the pencil and all that. Uh, Essentially, what you have here is the Commander series. On the top, what you have here is a multi time frame radar screen. Again, you look across to the right, you have the 30-minute, the 60-minute, 240. Now you could change these. So what you could do is you could just look inside of here. You could, take this whole thing here, right click it, format it. And inside of here, you could say, well, we want the 30 minutes is always the minimum, by the way. That's how we had to develop this. It was really important to have some baseline. That's just for the radar screen. You could use any time period at all in the charts. But let's say we want to change this to 90. Okay, we just change that to 90 right there, and you could change it to daily, weekly, whatever, but let's just say 90. Everything loads again, and then we have 90 minutes. But let's just go back, and let's put this back to 60 so that we have some standardization of what we're looking at here. All right, so what are we looking at? So the first one we're looking at is the ES. Now, when we tell people, it's really important. If you're using futures, use the generic, use the core, use the at whatever it is. When you're trading, of course, right now you're going to be trading the June contract on futures. How many of you, first of all, if you use primarily futures, just click, just wait till I tell you what to do. If you use futures, wait, if you use futures, I want you to put an F. If you use equities, E, currency, C. So what else do we miss? And stocks. Oh, I guess equity. So FEC. So if you use only, yeah, that's how you do it, right? FEC, right. All right. So there's a mix, a lot of equities, some futures, some currencies, futures, equities. Okay, so mostly futures and equities. Well, options too. Oh, options is good for it because you can actually use the baseline on the stocks or whatever you're trading to get a better read on that. Okay. So let's just go through some basic points here, and then again, it's good for any particular stock or future or currency. And we have, you see how they're mixed up here. We have all of them listed here. But what this is saying here is when we put this in, this is okay. Well, on a 30-minute basis, the ES has been long 2, so it's confirmed. You can see that's right here on the bottom. This is our ES right here. So the ES is long 2. We got an alert. Back towards the end of the day today to go long. It's been short for a while. You see all this going on with the red. Went long. It's been 2 bars. It's been 4 bars on the 60-minute, but the 240, the daily, the weekly does not have a signal. It's consolidating. Look to your right here. This is the daily chart, and you can see that there's gray. See the gray? So the gray is saying, well, there's no trade right now. Just kind of it's in between. It's holding on. Notice how magic. Here's some magic for you. We have a red. We have a blue. We have a green. Look at where these things ended up, right on support. They blew through the support, they moved back up, and they landed right back on support. So it's important to note that there was, a good amount of this level of support here. And then they moved up after, obviously, or whatever the time period is, but they've been holding their support really well and then bouncing. That's on this point. And then again, you got a lot of other things going on here, which we'll go through. Basically, we're saying that, okay, from left to right, I can see we're long a few bars, nothing here. Does that give me a high confidence level? Nah, not really. I don't know what's going on in the weekly. There's some consolidation going on. I'm not really thrilled about that. But let's get back to this chart on the left for a second, give you some real examples. I'm going to turn a few things off here for a second. I'm going to turn off a few of these right there. I'm just going to show you very simply what this looks like with altimeter only. And then we're going to build on this. So with altimeter only, what this is showing me is levels of important support and resistance. We see that there was a good amount of movement on the upside here, came above the resistance on this altimeter that continues to draw. As soon as it cracked this level of support, where was that? About 2680 on the ES. And again, this is the same discussion about whether it's a stock or a future, whatever it is. It doesn't matter. It's just price. It doesn't matter if you know what this is, okay? But what's important here, and I kind of stretch this a little bit more on a 30-minute, when I look at this, I always say, okay, where are we here? Let me look left. I see in a range that there is a significant amount of consolidation going on in this range right there. I like to use my little boxes all the time that line up to the current boxes that we're looking at. There's a good amount of consolidation in this range here, okay? But really, if I take this and I really think about this, this is my big consolidation range right about here. Let me move this down a little bit, right there. Once we saw this break down through, do you see how we changed from consolidating within a range of price to all of a sudden a vertical move very fast down? There is nothing to my left. There's nothing here. There is no particular altimeters. There's nothing in there. It's like we have clouds and all that here and just clear sky, boom. Now, if I add to this for a second, the radar is telling me the same thing. There's like nothing going on down here. And once we get past any of those times when we see that there's very little levels of interest, very little levels of significant amount of resistance, support, interest, volume, buyers taking opportunity to buy things, there is a very significant chance that if things move down, they move down very quickly. We want to always trade, or best efforts to trade, a vertical move and looking for those vertical moves. They happen on the downside, they happen on the upside. On a daily basis on the right, just going back here for a second, you can see that we have, for example, now this is with the autopilot turned on, that back in the beginning of 18, there was a green line, right? So you see this, let's see, back over, actually it was right here. December 15th, we turned green. And the autopilot said, stay long, stay long, stay long, and stayed long all the way through right here where the orange showed up, which was the 30th of January. Now, these are standard indices. I didn't pick something out of the blue to make it look good. And this is, there's a couple patterns here. This is skinny. This is skinny radar. See that skinny, but with a very significant bottom. This is like a baby bee. Okay, these are normal. This is a normal profile. This is kind of a normal profile. I'll show you some normal profiles later, and I'll try to identify that. This one's an interestingly small normal profile. Again, if you can kind of write the B or a P, there's also a double B. And then there's these skinny things that do this. So there's like a lot of, when you see something like this, there's a lot of consolidation, but we saw that run up. And then what happened here is that once again, notice that all of our major volume was really down here. Right, we all see that? As we go up, we have purples and we have blues. That's not a really high interest area. We have our yellow bar. Let me turn something off for you here. I want to show you something here. Let's turn off autopilot and let's turn off altimeter. Now all we have is our radar on here. When we look at the radar, you can see that the area of interest really was at the bottom. This is where all the volume was, right here in this area, in this area for this time frame. Now what happened is that once we got above here and we started moving down, well, we retraced a lot of that. Why? Well, that vertical move that moved up reversed around dramatically. And what happened from that was that there was a significant amount of drop off with regard to the fact that there was nothing to our left. There was really nothing there to really fight this. And then it fell down, it moved down a lot lower, of course, we know that. And then we got this very strange, even though this is a normalized profile because it's center heavy, what happens is that we saw this consolidation again inside of here. It tried to break out above here, and then it started falling down and then it fell down very hard because again, when you look right below there's nothing there. There's nothing below this area. There's a little bit here, but very much tailed off. And now we're back into a fat profile again. This is kind of a B, but it's semi-normal. It's not totally pushed down to the bottom of the top. But you'll notice, and let's kind of make this a little bigger here, once again, that when you get these breakouts, they happen very fast. But when you get the breakdown, it happens just as fast as well, because there's not a lot of volume interest here. Nobody's playing. Everybody's playing down here. This is where they're playing. So you're getting a decent amount of support. Again, draw a quick box here around this whole area of where everybody's playing, right about there. And that's where you're getting all your support. And that's where you're getting, it just shows you right on the chart, right here, exactly what's happening, where the players are playing. So now when we take this and we look at this again, once again, a little bit differently, we just take the autopilot on, we'll take the radar off, you can just turn these on. This is showing us that, hey, if you just didn't know anything, you didn't have any of the other levels on, you just followed red, green, yellow, orange. So you say, well, we're long, I'm out, I get short, I held the short for a while. Now you can always take your short out a little bit earlier because we know that The proclivity of buyers is to buy. Markets generally move up over time, generally speaking. Short amounts of time, especially when you see major rips lower, are oftentimes looked at as value. So you may want to like move back and think about moving out of that. A short position at any given time. There's nobody says that you have to get out. Long positions, though, when you start seeing that rollover and that change, there are definite good opportunities to get out. But if nothing else, you can actually set this analysis technique. So we're looking at the autopilot. Here we go. And this gives you the opportunity to say, well, no, I don't want to short anything if you don't do any shorts. So I'm going to put in the word false. And watch what happens here. What happens is that this doesn't give you any, it gives you just grays. It gives you, it should be a little grayer there. Only gives you the signals, the yellow signals on longs. You're not going to see any short signals here. You're the out and all that. So you're in on the green, in on the yellow, and then you don't play any otherwise. I actually should have changed a little bit more. I'm not sure why they didn't change this now. That should change. There must be something on here that I didn't do right. There's also the opportunity inside of here, if you noticed, that you could do stops on touch. So instead of it breaking through, you could stop on touch. You could change some of these parameters too, depending on how you want to make it either more aggressive or make it more less aggressive, the strategy itself. So for example, that's just that. So now we have the autopilot on. We'll put back on the radar. We'll put back on the altimeter. Now you have all those playing. One of the things that's really kind of interesting about this is when you look at, let's go back a little bit further, and you see that that the trend is up when we look at this point of control, this blue line, it's progressively moving higher. That's a trend up. Now, obviously, it's a trend up because the stock is moving up. Okay, but now all of a sudden we start to see that change dramatically. The point of control moves. Now look how tight these are. We got a point of control here, point of control here, point of control here. Then it starts getting a little bit more wild. Then it gets really wild. Then it's down here. You got these wide ranges. You would expect to have more volatility when you see the ranges move apart as consistently as they have here. Again, this doesn't matter if this is a future. It doesn't matter if it's a currency. It doesn't matter. Just for the heck of it, let's kind of bring up, the problem with BTC USD, there we go. There's Bitcoin. There's actual live feed of Bitcoin, 9,088. You can check this with Coinbase or GDAX. It's the same levels, exact levels. But you'll notice, let's see if we can see this here. This is I think we turned off the autopilot on this, didn't we? Yep, we did. Okay, let's take out some of these other ones. Take out the radar. Look at this. You could have got right in right here. And you saw this nice run up from 8,900. Probably go back a bit further. And then you were out of it right here, kind of dipped down. You got back in it, dipped down, got back in it, all for the ride up. And then look, it shows you the short right here, giving you a short signal. You're short there, you're out. You're short here, you're out. Yellow, you're in, and confirmed on a red. Orange, you're out. Yellow, you're in. Orange, you're out. And back again, this one kind of was a nothing trade. Now it's in a consolidation again. You do this with Ethereum. You can do this whatever you want. The only caveat I'll mention is they only go back to about, I guess it's about the 20th of February in terms of the data that they have on a daily. But you can go and change this around and look at this on a, 10-minute basis. Go way back on a 10-minute basis. So that's Bitcoin, for example. And you can change this. So we have 10 minutes here. Change this. I don't know. You want to change it a little bit? 5-minute? There's a 5-minute basis for Bitcoin. Or if you want to do ES on a 5-minute. No, we didn't do that right. At ES. Still didn't do that. At ES. Enter. See how fast this loads. We optimize this to make it load very, very fast. So if you are in fact a swing trader and you're using a 5-minute, again, it doesn't show up here necessarily, but you can get some decent swings out of here. You're long here, out here. So you're long at 26.25. You're out at 26.33. Consolidating says don't do anything here. Back in here at 26.35. Out at 42. Tried a little short maneuver over here. Didn't work out. Got out of it. Moved in at 26.40. It's now at 46. That's on a 5-minute basis. So again, you could pull it up with any stock. I mean, here's GE, 5-minute basis and daily on your right. Again, you can put whatever you want, whether you can either right click and say format analysis technique and turn on status, turn on. That didn't work. Oh, but did it work over here? Yeah, should have worked. Format analysis technique. This is off. Radar status, close. There's your radar, 5 minute. Change it up to a 60-minute. Whatever particular time period you work with, it will work. Okay. So we talked to ES. So if somebody wants to talk about the spies, we could talk about that. You want to talk about SPY right here. This is 60-minute. Let's go back to 30-minute, which is kind of the core that I use as one of them. So the SPY, let's kind of take a look at this. Just recently, you can see that you were short on the SPY on 12 o'clock on the 24th. That was yesterday. This went short on the autopilot. Got you out down here. So you got short at 266. You got out at 262. I don't know what that was. 40. Tried to go short. Got you out with no loss, no gain, because you see that the short tried to go in right about here. You had some gain here. It came back up. You were out. And right now it's in a consolidation on the 30-minute. But I want to show you something for a second. Let's kind of put SPY in up here. I may have it already. What was interesting to note on the SPY is when I look from right to left, I look at my longest time frame to the right, and then I look left. I look to the right, and I want to see what's my longest time frame telling me. What's the overriding trend? Well, nothing on the weekly. I'm short for 2 weeks on the 2 days on the daily. I'm short on 10 on the 240. And there's nothing going on here. You can see there's nothing going on here. So it's short right now. It's been short for a couple of days now. So what I would say is you want to probably look to, again, it's not the most impressive short out there, but you want to look to more being towards this short side if the short and press on the shorts if that happens. On the long side, I look for counter trade trends, and if it starts to move away from that. The one thing you'll notice is it probably was on, as we noticed here on the 30-minute, there was a bunch of shorts that happened here, but now we're sort of out of it. So this changed recently. Okay. What's interesting is, for example, on Apple, looking again right to left, we see it was short for 4 days. There's a short alert on the 240. There's a short alert on the daily as well. So now all of a sudden we're starting to see short, short, short. On the other hand, you look at GE, short for 14 weeks, short alert on the daily. But now all of a sudden the shorter term time frames are starting to change dynamic a little bit. We're no longer short on the short time frames. So all of a sudden you might want to look for a counter trend trade. And what's interesting, if I showed you before, I'll show you again. Look at this chart. This is pretty fascinating. Look at the chart we're looking at on GE. And I know GE's got its problems and everybody's probably taking a stab at this here or there, but generally speaking, right there, that range, there's nothing left on the 30-minute. There's nothing there. Let's go a little further. Look at this area. I mean, if this pops through, I would say about, well, let's look here, 1414. This thing has a chance to go up to 1437 and then probably break right up to 1451. This is nothing there. And then you can look at your daily to see if that confirms out also. 1443 is some resistance right there. You know, really you want to see probably close above 15, and then it could jet right up to about 16. So that's there. Now Tesla, somebody asked about Tesla. Tesla looks semi-miserable. However, what's interesting about Tesla is it doesn't seem to want to break down. There is a pretty solid area right here. Now I'll do a little chart drawing again. It's a pretty solid area that, at least if nothing else, that if it drops below where it is right now, it should come down to about 269. It's very easy to see that, but for whatever reason, there is somebody, something that just seems to like this and doesn't want this to drop back down. Maybe because of this big move that it had down here and people are trying to make back their money. And I'm not sure what it is, but for whatever reason, it's a very stubborn situation on Tesla right now. It is banging along the lows here, but you know, you could, again, it looks to me like this is a short. In terms of a tick chart, I don't know, 25 ticks, it'll probably work. This works. The tick charts are too fast for me. So if you could use tick charts, that's fantastic. I don't really understand, because what happens is you're going to get whipsawed. I'm not sure what the point of using a tick chart is. It's just way too fast. If you want to go down to maybe a 5 minute, the other thing is that's important to recognize here is that when you're looking at these charts, realize that the more data we have, the better we are. The more we can feel of where the volume levels are, the more confidence we can have in the actual levels. Doesn't that make sense? So this whole idea of looking at the charts and what time frame, I personally can trade very well off of a 30-minute, because with a 30-minute, let's kind of pull up, I don't know, what do we got here? Yeah, let's look at USD, this one. Over 30 minutes, there's plenty of opportunity to take these trades. And also, the longer you're looking, the less you get spooked out of every single little tick. I'm sure in this whole range right here on the USD, on the USD JPY, the yen trade, I'm sure that there was probably a lot of times that if you had a much shorter time frame, let's kind of go down to, I don't know, 2 minutes. Well, it's probably way back here somewhere. You may have been in and out, in and out, in and out. Whereas on a 30-minute time frame, I'm not trying to convince you, there's a lot greater opportunity for more profits. Just my opinion. So that gives you a pretty good insight into how this works. There's something else. I mean, I'll mention that we also have the aileron, which we're not really necessarily talking about here, but this gives you a really good trending sequence of overbought, oversold. When you see something like this on the bottom of this chart, and you see that you're basing out here where there's some support, not the best example right here, but a decent example. So coming to the bottom, we see that it's oversold like this. We call this the banger. Usually what happens here is once you start seeing this start to move higher, this aileron, we get a good reversal happening. Let's see if there's one that, let's take a look at, yeah, here's some other ones here. Look at these. You got a bunch of these happening right here on the bottom. And what happens here is we saw multiple levels of oversold situation on the ES on the 30-minute, reaching support, holding support, starting to move, and then wham, moved right up. Same thing here. Look at right here. I'm going to draw a little line here. Perfect. Called the banger. When you see this get oversold as much as it is right here, and you see it holding support significantly, and then all of a sudden a little bit of a move higher and the trend changing, there is the opportunity for some serious opportunity when the setup kind of confirms like that. And then let's go back to SPY, which should look about the same. Let's find one. So here's one of them right here. Let's see if that's one. This one right here. That's not a great one because it did hold support. I mean, this is good. It did hold support. We saw that move from 261 to 263. There's a lot of oversold going on here. Oversold does not mean that it doesn't have to stay oversold. Oh, here's a good one right here. Look, right here. See how you hit support? You got a line drawn. You got a level here that is oversold on the aileron, and then you start moving. This is a separate package, the aileron. The aileron can be added on to any of these charts. There's the aileron 360. There's also the aileron chart. Aileron on a daily chart. Yeah. Yep. There you go. Let's kind of back this up a little bit. So right now, so what is the aileron telling us right now? The aileron is telling us that we have some oversold conditions that we're starting to develop here back on the, what day is this? It's the 22nd of March. And we started to see it's starting to unwind a little bit. Okay, here's some overbought circumstances right here. This was, 3 in a row. We call these clusters, and they're starting to get overdone, and we're starting to see this roll down. It kind of works like the MACD or stochastics in a way, but it has about 14 different separate indicators. Some are traditional, some that we built to try to give us a better judgment of what's happening. But once you start seeing this aileron moving up and above the zero line, it's an interesting place to start thinking about getting long. It's starting to roll down again here, and that did cross over. Very shallow move, right? Very shallow, not a lot above, not a lot of below, not a real good confirmation. We go back, look, let's see if we can find a banger here somewhere. Bangers aren't often. When you find them, that's really good. There's no support really here. So this, I mean, where do we end up? Right here? Yeah, I like to see when it hits right on support. I don't see that in this particular chart. Let's see if we have another name here. Caterpillar. You see Caterpillar on the daily chart, you see this got you in long in September and didn't take you out till February. I like that run. Actually, I take it back. Sorry, took you out right here in the beginning just for a moment, then back in. Um, Here's some overbought circumstances right here. Again, overbought right here. Overbought doesn't mean it has to turn around immediately. Overbought just means that it's overbought. You have to watch what's happening with that. See Twitter, what's going on there. Not a lot of identification here. There's a little bit of a hole here, probably why it moves so swiftly today, right here, this region. See this region right here? Yep. Probably why it ripped lower. See how it ripped lower, the tail there, and then came right back up? There's a big region of downside that there was just nothing when we looked at this to the left. Throw me a couple of stock symbols. Oh, Amazon. I deleted something bad. Amazon, AMZN, enter. What do we have? Do we have 30-minute on the left? Yeah, 30-minute. Okay. Okay. Here's a banger right here for you. Kind of held support. You had a oversold, kind of rolled back up right there, and then it started move right back up. On a 30-minute chart, you saw that you were in here. There was nothing to the left to speak of over here. Probably reached an all-time high. That's why. No, not really. But there was nothing here. Look, there's nothing there. Actually, let me show you something else that's interesting. Check this out. Let me go to the radar. Number of radars. I don't know. I'm going to put 20. Right now we only have 3. Look, built all these radars backwards. But still, look at this. Amazon. Look at this range. There's nothing there. There's nothing in the background there, right? Even though it's kind of a little bit obscured, but there's nothing there. So therefore, the opportunity for it to move up is very fast, but when this thing rolls down, it can move down, as it did, move down just as fast. Now that is probably because we had a lot of tweets and things going on with the president, and he was saying all sorts of nasty things about, Amazon. But remember something, Craig. What I'm going to do here is at ON. I think that's oats, right? No. What is the oats? What's the oats? Is it? It's not ON. ON 18. What's the symbol for oats? There it is right there. But there's a generic that I'd rather look at, but you can look at these. So where are we in the oats? So the oats got some. Let me take off the aileron right now. See this a little bit bigger. See, it breaks down hard, consolidation, a little bit of an up there and out, kind of got you safe. Nothing happened on a daily basis. 260 down to 228. You would have been a major winner. Not sure what the generic. Oh, it's at O. That's probably going to show up a lot better. It's really important to use these, the generics. It gives you much better information going backwards. A little choppy action here. SLB. Schlumberger. I just like saying that, Schlumberger. What's Schlumberger showing us here? A lot of choppy action, big holes, real skinnies, a little bit of a nub here where it did consolidate for a while, drop below because there's nothing to the left. Some of these, you saw a nice pickup on the daily all the way up, and it kind of got you out, kept you out, then you went short. Now it's consolidating. This in and out, in and out, in and out. This wouldn't be a stock that I would trade right now because I'm seeing all this choppiness, all this yellow and orange and yellow and orange and yellow. It doesn't do it. It doesn't. It's not a quality position to look at that I would really consider. Nvidia. Yep. All right. There we go. It's all set. So Nvidia, what is it showing? Again, a lot of choppy action all over the place. This is kind of Bitcoin or cryptocurrency these days related, so everybody's getting all crazy about it. Powering the whole mining operation. So, it's interesting. It's in a definite area right here. I mean, can everybody see this right here on the right-hand side? Again, just you can do a couple different things. You can kind of draw some lines and just to have it right there. I would say that, let me move this up. That's a major resistance, which it does show resistance at. And downside here, let me see where I'd peg the downside. Probably right about, that would be the range I'd look at. A couple little nubs in between here. Probably one more, right? I always look for them to line up a little bit. That's not really lining up. I'd probably say that. which is where it lined up to the right. There you go. I was looking to my left and it happened to be to the right. That's where your drop off point is. If it drops below there, you got big problems. All right. Let me click. I like to clean my charts unless I'm actually holding them. Somebody's asking about crude. Again, you can use whatever time frame. We're just using this as examples right now. Okay, I think I'm gonna put crude up here. Let's see what's happening. We got 2 weeks long. It's been short, 7/240s. You can see that in this area, there's a lot of emptiness in this area, so that's where we saw that big drop down. Consolidating now, clearly on an uptrend, no question about that. Crude probably play a little bit on the 30s and the 60s, a little bit easier because it moves that much faster. So you get some. Let me go off the radar here. You got in here, move out, chopping around a little bit, got short a little bit, kind of chopped in and out a few times. Right now, you're on the sideline. Some overbought on the daily here, but you're long. The overriding is long and starting to get a little bit questionable now on the short side. We got about 2 more minutes left. Yeah, Facebook looks pretty rotten. Facebook right now is trading at, let me kind of put the level what Facebook is trading at the moment, because we know that there's no problems with Facebook, right? Yeah, probably an all-time high. A little bit higher than that. Facebook trading, oh, can't even see it. There it goes, not an all-time high. Actually, what all-time high was, no, it was 195. Good point. All-time high for that range. How's that? That is a 60-minute. It's a good point. It's trading. That's what the problem was. Here, let's do this over here. Trading right here, 170 bucks. Nope, 107. Trading about there. Look at that. Does anybody notice anything right there? Why is it right now stopped at that level at this moment? Anybody, any thoughts? Look at that. Look at the lineups. Always right to left. We look right to left. You got major points of resistance right here. Major resistance. Now, if it pops above there and pops above this level, which is 171, we'll call it, then you have some upside opportunity, probably up to about 175. But to answer your question, yes, it is an indicator to buy, and you can always go to trigger charts. I'll give you that right now. And there are lots of videos available on triggercharts.com. We'll go back to the slides. And as I mentioned, actually, let's go back to here for 1 second before we finish up. As I mentioned before, yes, they are available. It's 149 bucks a month for the Commander Series. Get a 10-day free trial. Just click on the free trial button right there. See that? Start a free trial if you haven't had it already. Or you can subscribe. The parts of it, you could buy the parts individually are more expensive. You can buy just the autopilot, just the altimeter. So if you wanted to buy with the setup that we just looked at, you get the Commander Series and the aileron. We dropped that price of that aileron. The aileron 360 is a whole different program that has some other screening tools in there for the screening and filtering tools. But if you want to just buy those two, you get the aileron indicator and the Commander Series together, and you could build, put the aileron on the chart. You're just going to have to insert it because it doesn't come with it. You'd have to insert it to the chart when you have it. The other thing you want to get maybe is the Eco Charts. The Eco Charts is, it shows you just like this. It shows you charts of economic information. So you can just, there's a whole list of various things that you can actually chart inside of your trade station. So that's free. So there's a special for you right there. But yes, all these are available for 10-day free trial on the Trading App Store. And I appreciate everybody joining me today. If you have any questions, like I said, go over to triggercharts.com. Make sure to listen to The Disciplined Investor on, it's a podcast you can grab over on iTunes or wherever it is. DH Unplugged also live on Tuesday evenings at 9 o'clock with Chat, myself, and John C. Dvorak. So check all those out. And hopefully, if you have any questions, we're here for you also. So thanks, everybody, for joining me. Don, I hand it back over to you.